Hey folks, Dan Frio here with your opening bell for August 19th, 2025. So today, really the only news we have coming out today on the real estate side of things is housing building permits, building starts, and things like that. So I'm going to take it over to CNBC in a second, but let's get over first the headlines in the news that we're going to talk about in today's video. Those are right through here. We got the Dow Jones up 100 points, but the rest of the market is basically flat right now. You can see right through here, stock futures tick down as retail earnings roll in. Traders await Powell's speech. That was the headlines for yesterday. Powell's speech is coming tomorrow from Jacksonville. So what's in today's news? Well, let's get to it, folks. So in today's video, folks, we're going to talk about housing starts and building permits and how if we get more inventory, will they actually help housing prices? Because really, there's no financial news coming out today. Thank goodness we don't have anything in regards to tariffs today as well. So let's get to today's news that we're going to look at right through here. Here's the economic calendar that I want to discuss with you guys. Tuesday, basically all we have is building permits, housing starts, Atlanta Fed GDP, and FOMC member Bowman speaking. So right now we got the housing starts. Let's make this a little interesting. Let's go over to Rick Santelli over at CNBC. Let's let him give us this information. Then we come back. I'm also going to show you, well, an interview with this young man down here. He's from Housing Wire. He's going to tell us where the housing permits are really ticking up and where the markets are kind of heading and what interest rates we need to get housing really cooking again. But first, let's go over to Rick Santelli and see what housing starts look like and see if this is going to help the housing market or not today. So, Rick, take it away, buddy.
Seconds away now. In fact, about 5 seconds from housing data, and Rick Santelli standing by at the CME in Chicago. Rick, the numbers, please.
Good morning, Joe. Yes, we're looking for housing starts for the month of July. Permits, this is a preliminary first of two we'll get for July. Starts expected just a whisker under 1.3 million, come in significantly stronger. 1,428,000. That is a nice jump from 1,321,000, which was last month. And that was the lowest since the previous month, which was 1.2 plus million. But the numbers have been on the downside. This really is a strong number. It's the strongest number going all the way back to February, and it would mark the second strongest pace of the year for starts. If we look at the permit side, a little bit light, 1,354,000. That's about 30,000 light, and it follows 1,393,000. So it's still a bit on the light side. And if we look at this number, it comps to the same place last month did, to June of 2020. So permits are light, which means maybe down the road we're not going to get significant building. Many are paying attention to the inventory levels of single family, which are actually on the high side, and pointing towards potentially more aggressive tendencies towards the multifamily side. We know affordability.
Okay, he starts to talk about affordability, but I want to break in here because this young man from Housing Wire is going to kind of add into that equation. He starts talking about single family, multi-units. So let's get his take on this real quick. I usually don't do two videos, but this is kind of back to back. He talks about, where the market is on housing starts. Then this guy from Housing Wire really kind of digs down into those numbers. So, Joe kind of botches his name and so forth, but still a good interview. So let's take it away.
Joining us now, Logan Mohtashami, HousingWare lead analyst. And I guess the first thing you can talk about what the Treasury Secretary alluded to, or just respond to the numbers that we just heard from the federal government.
Single-family permits have been going lower and lower for some time now. The big publicly traded builders can still buy down rates to get below 6% to move product, but the smaller builders are at a disadvantage here. Multifamily construction has already had a very big crash in starts, so they're working from a very, very low level. So when you see these big housing start prints, they're very volatile. Simply put, mortgage rates are too high to get things moving again. If you can get rates down to just a 6%, the builder stocks are starting to outperform a little bit. Housing does tend to act better towards 6%. It's just being able to hold it there enough to get things going. So
So he starts going into how rates can come down and so forth. We know if, housing would like 4% interest rates. So as rates come down, we're seeing that here in our office as well. When we hit 6.5%, the phones went off the hook. I can't imagine when we hit 6. When are we going to get there? Let's see if we're going to ever get there based on some of the news or some of the data that we have today. And that's why I want to kind of dive into. But here's what the scary part. Multifamily starts, 2 plus units increase month over month in July. Multifamily starts were up 24%. And that's the red line. So, it did take a crash, but look at, here's multifamily, but now it's ramping right back up again where single family was just steady. It did have a little bit of a decline here, but if they're going to ramp up on multifamily, that looks like that might be the trend kind of going forward. So that's what we're seeing through there. So here's what the headlines are saying. U.S. single family starts permits in July. We already went over those. So what's it going to take? Can we even get rates back to 6%? Well, let me show you what might take it to what it would take to get there. Okay, so it starts with this. This is the federal funds rate. Okay, this is the rate the Federal Reserve controls. It doesn't have anything to do with the other bond market of this. So if you can basically, a lot of the short-term and secured debts is based on this rate. For example, you can put into a CD, a money market. When's the last time you could put in a savings account for anybody older than 40 or 50 years old? How a year, 2, 3 years ago, what was the interest rate on your savings account or CD? 0.025 maybe. So now the Federal Reserve jacked the rates up. They need this to come down to about 3.5. Here's why. Here's how the markets get affected this, especially mortgage rates. You take things like this. Well, the 10-year Treasury. Let's get over to the 10-year Treasury. And I want to explain to you guys some of the things behind here. So until we get the 10-year Treasury anywhere in the 3.5 range, you're not going to see rates at 6. And here's why. There's a spread between the 10-year Treasury and mortgage rates of about 2%. And you can see that right through here. 10-year Treasury today is 4.3. You add 2% to that, and it's 6.3. It's still elevated from that. So let's start that as our focal point. You need to get the 10-year Treasury down to, if we need 6, you need to get the 10-year Treasury down to 4. Okay, so what's it going to take? Well, it needs to bring down quite a bit to get us to 4, but 3.5 would put us in the sweet spot. So we're going to have to have dramatic reductions in rates across the board. The 10-year Treasury, as well as the Federal Reserve, is going to have to cut rates at least 100 basis points to get the federal funds rate down into basically the 3.5 range. But that's in the talks already. Some of the new Fed people that are hopefully going to be in charge soon, they're saying there's easily can be 100 basis points taken out of the federal funds rate that could just get us down to a 6% interest rate. Those are a lot of ifs, whats, could have, and maybes. What's really going to happen? Let me give you my projection on what my thoughts are. So I'm expecting this week in the markets to basically look like this. All the housing starts and everything, they're in, and they're not going to really affect the markets. We're going to see tomorrow on Wednesday, Waller's going to speak. That's probably not going to affect the markets as well. Then we're going to have the FOMC meeting notes. This is basically what they're going to tell us is come out and actually provide us with actually what they talked about at the last Fed meeting. Well, I don't think there's going to be any surprises there, but we do know there was 2 Fed officials that defected, meaning they were in favor of cutting rates and not staying steady. That's the first time since 1995 that there's 2 people that dissented. Now, there's another Fed official supposed to be getting assigned to the Fed because we had one person resign about a month ago. So they're getting replaced, and that person also is in favor of cutting rates. And hopefully they can get in there by the September meeting, because if they do, then most likely we're going to see rates being cut. So I don't know if this Federal Reserve meetings are really going to tell us much of what we don't already know, but we're going to anticipate what that news is going to tell us. Then the next piece of the puzzle is Jackson Hole. This is when the federal chairman, Powell's going to speak in front of the whole world, and he's basically going to let them and us know what's in his thoughts in regards to cutting rates. And basically that's what the markets are on hold for right now, right through here. Stock futures tick down as retail earnings roll in. Traders await Powell's speech, and that's the speech at Jackson Hole. So we're going to focus in on that and how those affect these things over through here and mortgage rates. Now, expectations, like I said, is right through here. The Federal Reserve is supposed to cut at the next meeting. There's an 83% chance of their cutting in the September meeting. From there, it's a flip of a coin. When are they going to cut? They're going to cut in October. They're going to cut in December. There's also, most people are expecting 2 rate cuts by the end of the year. So if we cut in September, then they got to cut either in October or November. And the data is only going to help us determine that, as well as Federal Reserve's comments this week at Jackson Hole, which I think is going to reveal a lot of information for us, folks. So that is that for that. And then you go over to earnings report. We have 3 earnings reports in so far today. Home Depot missed. We have MDT that beat, and we have one other company waiting for their earnings. So not a lot of data coming in today other than Home Depot. Tomorrow we do have Target and TJ Maxx. We'll see how those come in. And then last but not least, who am I? Okay, folks, my name is Dan Frio. I do this report actually 2 times a day to inform you guys what's going on with these things and the whys behind it. So a little bit about me. I'm actually a mortgage advisor. I've been doing this for over 35 years, folks. I would love to be able to work for you. And if you want that, you probably can. I'm licensed in all 50 states as well as Puerto Rico. And the reason why is I work at a bank and trust. So that gives me a federal license. But the unique thing about us here is we are a bank, but if we weren't, I'd say we're a large broker, folks. We're a broker with over 30 different lenders that we work with, but we're actually a bank. How does all this work? Well, you put in your application over here, and I have a slogan: 1 application, 1 credit pool, and we're going to compare your loan to over 30 different lenders. How do we do that? Well, because we're a bank and we're a broker. I know it's confusing, but think of it this way. Reaching out to me, you're going to get quotes from over 30 different banks and lenders with 1 application and 1 credit pool. If you want to find out more about that, just visit us at therateupdate.com. You can give us a call right up through here. It'll be me or Alan answering the phone. If you want to ask me a question, just hit the Ask Dan button right through there. Click that. And if you're looking to refinance or buy, I got some good news for you. If you're looking to buy, scroll down right to here and just stop. This is a program that will give you up to $7,000 if you're looking to buy. Not a lot of people are calling in, folks, so you don't let this free money go by the side. But if you're really looking to refinance right now and you're like, Dan, I just want rates a little bit lower, and can you track that for me? Well, yeah, I can. How do you do that? Go to the refinance tab right through here. It doesn't tell you about refinancing. It tells you, or gives you the opportunity to tell me what interest rate you want to refinance. So what you're going to do is put in your mortgage information right through here, folks. We don't sell the data. I'll just use this personally. And when rates hit exactly where you want, what I'll do is I'll reach out to you. We can kick the tires and see what the cost is going to be, what the savings is going to be. If it works for you, we'll get you locked in and the paperwork started. But otherwise, one more thing I want to show you guys. If you've already got a quote and you're like, Dan, how do we get quotes from over 30 different lenders, or how do I compare my loan to 30 different lenders? Well, just go to the loan estimate review tab right through here. Just click it. You're going to upload your loan estimate right through here. Pick the best one you have, because if we beat them on fees and rate, I'm expecting to win you as a client. So what you're going to do is put in all your information right through here. Tell me the closing date. You need to be 3 weeks or more out before we can do this. Otherwise, I can't help you, folks. But check out all these services we have available to you. But I will be live today at 2 o'clock with Stock Talk Tuesday with Dan Frio. A little interesting today. It's going to be for those newbies out there. If you're just wanting to get started and learn how stocks work, how do I buy them, how do I analyze them, what's the best way to approach this, I'm going to show you how just investing $100 a month can basically start you on your way to wealth creation. So check out our video or live event today at 2 o'clock. Otherwise, I'll see you here at the closing bell to let you know how this mess ends for the day, folks. But right now, what we're looking at is MBSs are up 5 ticks. Basically means mortgage rates are going to be flat as a pancake today, folks. Thanks a lot for watching. If you haven't subscribed yet, please do so over there. I'm trying to hit 40,000 subscribers. Only you guys can help me. So if you'd click over the subscribe button, I'd greatly appreciate it. See you later. I'll see you either at Stock Talk Tuesday or at the closing bell, folks. See you then. Bye-bye.